When your sales decline by 4%, but you decide to buy back another $110 billion worth of shares and raise the dividend by 4%, well, it's kind of hard for your stock to go down, and that's what we're seeing in the after hours for Apple. What is going on, investors? Hopefully, guys are doing well out there. For almost the entire history of this channel, when we join you for Apple earnings, they are usually the most valuable company. This year, they are not. Microsoft has solidly taken the lead from Apple, in large part because when we come over here and look at the financials for Apple, we are seeing declining revenues. That is leading to some declining profits as well. All across the regions in the world, a lot of Apple products are not selling as well as they did a year ago and even 2 years ago. But like we said, when you come down here to the cash flow statement, the company is buying back the shares at a rate you just simply don't see very often in the stock market. The question that investors have to ask is, can Apple get back to outperformance? Because, yes, look, over the last year, you haven't gotten hurt with Apple. Shares are roughly flat. Year to date, though, shares are down about 12%. Stretch it out over a longer time frame, and Apple has performed up over 221% over the past 5 years. Can we get back on that outperformance train? Well, I tell you what, let's jump into the numbers and see what we can find. Revenue coming in at $90.8 billion. Again, that was a decline year over year by 4.3%, but the expectation and that bar was lowered for Apple as they beat expectations by about $190 million. I think what it does, though, is it brings into question the upcoming quarter. So we got Q3 coming up, historically the weakest quarter for Apple because they're moving into a refresh cycle on the iPhone. You're kind of moving into back to school kind of a refresh cycle there on the computers, the PCs, and the iPads and those types of things. So consumers tend to wait for the new products for Apple. $82.9 billion in the upcoming quarter, expecting 1.3% growth. Now, the range, though, from Wall Street estimates, and these are well paid, 30 analysts, is really wide, from down to $75 billion, which would be well lower than the quarter we just put up, all the way up to about $87 billion. Where Apple falls in beneath that spectrum certainly remains to be seen and will certainly drive the stock as we move to upcoming quarters. Now, as we move towards the back half of the year, you release a new iPhone, revenues are expected to accelerate, but not dramatically from a percentage basis year over year. Kind of low single-digit growth out into several quarters, and certainly with a $100 billion buyback, a dividend, those types of things, that's enough to keep Apple shares in the range that we've been in year to date over the last year, underperforming a little bit, going more or less flat. What's going to reaccelerate this to that next level of growth? I think that question is still out there for Apple. Total net sales, again, coming in at that $90.8 billion. That was a decline of 4.3% as last year you put up a number closer to $95 billion. You're seeing a dramatic drop off on the product side. On the services side, you continue to see increases from $21 billion up to closer to $24 billion. And on the iPhone, the physical goods, the plastic and the glass, you went from $74 billion down to closer to $67 billion. So on your cost of sales side, your products are going to see a drop in cost. As you drop in product sales, your costs are going to drop there. Look at your services. This is a fully mature business as you grew your revenues by nearly $3 billion. But look at your cost. They actually went down. So your gross margin really expanded on that services side. And again, that could come under fire in the future as that Apple App Store tax continues to be under fire, not only here in the United States, but more importantly, maybe and more advanced in Europe. But for now, Apple is able to continue to charge that tax, if you will, and continue to drive incredible gross margins. Look over the last year, folks. Despite lower sales, your gross margins went from $41.9 billion, roughly 42, up to $42.3 billion. So despite the lower revenue, you expanded your gross margins, particularly on the services side, and you squeezed out, believe it or not, you actually squeezed out more gross margins. Hats off to the executive team at Apple. Not an easy thing to do, honestly. Now, operating expenses, here's your R&D ticking up. What the heck is Apple spending $7.9 billion worth of on R&D in a quarter? I don't know. We haven't seen it. The iPhone literally hasn't changed. The iPad hasn't changed. The AirPods, they haven't changed much. They got to be spending this on something, and I guess we'll have a new product announcement at some point with Apple. Maybe it's going into the service side of the business, which obviously is humming right along. Your selling general administrative up fractionally from 6.2 up to 6.5. Your operating expenses, unfortunately, your total cost, unlike your total cost of sales, did not go down, but we wouldn't really expect that, from 13.7 to 14.4. Although on lower sales, you could have seen some operating expenses decline, but they really, from a rounding perspective, didn't go up a whole lot. Your operating income went from 28 billion, basically flat from a rounding perspective, to 27.9. When we get to cash flows, we'll see the rapid pace this company is buying back its own shares with its operating cash flow, but you get visualization here as you had 15.9 outstanding shares. Now you're down below 15.5. And with the announcement of another $110 billion, well, I guess that share count is just going to steadily move lower. Now, speaking of lower, in the Americas, United States, North America, if you will, basically flat on the sales side, marginally down. The only bright spot is Europe, as you went from 24 up just marginally. Been getting a lot of headlines out of China that iPhone sales have collapsed there. You see evidence of it here, from 17.8 billion down to 16.4. Maybe a refresh cycle will help Apple out there. Also in Japan, much weakness, $7.2 billion down to closer to $6.2 billion. And rest of Asia Pacific, big declines, $8.1 billion in revenue last year, all the way down to 6.7. Now, by category, your iPhone sales from 51 billion and some change down to closer to 46 billion. Now, we've been seeing with Intel and AMD and a little bit with Microsoft as well. They were correct that PC sales troughed at the back half of the last year, and now you're seeing growth. Look at Mac sales from 7.2 up to 7.5. We're not even into back to school. Just wait another couple of months. These things are going to be flying off the shelves. iPads are expected to get refreshed, I think, in the next week or two. There is an announcement, and my guess is they'll have those things ready to ship within a couple of weeks. If you're looking for a new iPad, I would just wait a couple of weeks, and that could be one of the reasons why iPad sales went from 6.7 billion down to 5.6. Your wearables, your other accessories, from 8.7 down to closer to 8. And again, we talked about that services business just humming right along, and your cost didn't even go up. And so you really expanded margins on the services business. It's just a beautiful thing. Now, balance sheet, still a beautiful thing. You got plenty of cash. It's balanced off in terms of total debt. So they don't have a ton of net cash. This isn't really a Google-like balance sheet. Google has tons of what I would call net cash. That is cash minus debt. Apple has about 66 billion sitting up here. They've got another 95 here. So about, we'll call it 170 billion dollars in cash. It's balanced off by about $91 billion in debt. So that's still, I don't want to understate that. That is still a mountain of cash. And given the interest rates that companies are willing to lend this company, well, I'd have a mountain of debt as well. Here's where the magic really happens with Apple. You get a 6-month ended cash flow statement, pull down net income of 57, which is just fractionally better than 54 billion in the year before. You get to add back in depreciation, share-based compensation, and you get your cash generated by operating activities. This is what's funding the buyback. This is what's funding the dividend as well. Notice year over year, almost flat to the dollar. So despite the challenges that you're seeing with sales in China, the declining iPhone sales, declining iPad, other accessory sales, the expansion of the services revenue has allowed you to have operating cash flows over the last year remained almost dead flat. Now, here's your repurchase of common stock with the shares down 12% over, or basically year to date. This would have been the quarter that Apple was buying these back. Well, your $43 billion goes longer. Last year, you bought back about $40 billion. Here's your dividend payments as well, from 7.4 up to 7.5. As you retire the shares, you now don't have to pay a dividend on those shares. So the buyback sometimes has a twofold purpose. in that you're buying back the shares, retiring those, and then now you don't have to pay a dividend on those as well. I think the 4% increase on the dividend, certainly when you look at these operating cash flows, could have been even better, because you see over the last, and this is just over the last 6 months, you've increased cash over at Apple by about $3.2 billion. Last year, it was closer to $2.2 billion. Now, technically, this stock has broken out. We were in not necessarily long-term breakout. We're talking about a shorter term since really the beginning of the year. We talked about how shares are down 12%. They started the year closer to $200 per share, and we've been making a series of lower highs, lower lows, and we were kind of waiting for this breakout, and here it is. That trend is basically over. Obviously, anything can happen in the after hours. Anything can happen tomorrow and overnight to cancel this out. But right now, I have a big fake green candle. You've gone from 173, and this one is accelerating in the after hours, up over 7%. At 185. If you're just sick of collecting dividends and watching a company buy back stocks, I think you could be a seller of Apple anywhere from where shares are trading in the after hours up to this 197. You'd have to expect there to be heavy resistance for Apple at these levels, back up here at 190, as the stock has gotten rejected back in July of 2023 at that level, December of 2023 at that level, and earlier this year in January. That 195 level is about when the sellers step in with Apple. But if they can prove, if somehow they can convince investors and maybe even consumers, more importantly, to come back to Apple and reaccelerate their spending, well, I tell you what, a company that is currently trading at just 25 times forward, that's probably a little overstated, given that the company consistently beats on kind of the top and bottom line by sandbagging guidance. You're probably looking at a very low 20s forward price to earnings. And if you can reaccelerate the revenue growth from low single digit to low double digit, maybe even back into the teens, well, that is how you power up above the all-time highs at 200, and you regain that position as the most valuable company in the world. Folks, that was Apple's Q2 earnings. We'll be back again with more videos. I've got Coinbase lined up. Hopefully you guys enjoyed today's video. See you again tomorrow.